What are 3 ways an ETF can affect Bitcoin and its price going forward? That's what we want to talk about today, and stay tuned to the end, because the third way that an ETF can affect Bitcoin can open up a whole new realm of possibilities for you as a trader. So let's get started. This is Crypto Intel. My name is Max, and I'm here as your guide. So the first thing I'd like to do is let's just define what an ETF is and what they're used for. So let me go to Bard here. An ETF is an exchange-traded fund. It's a type of investment fund that tracks either an index, a commodity, in this case a commodity, it would be Bitcoin, bonds, or a basket of assets like an index fund. They're traded on the stock exchange just like stocks, and their prices can fluctuate throughout the day. So an ETF is a fund that is traded like a stock. Now, as it says here, there's a lot of good advantages. One is lower fees. ETFs typically have lower fees than mutual funds. There's more liquidity. In other words, many more people will invest money into ETFs, and because they're traded through the day, just like stocks and mutual funds, they can be traded all day long, whereas mutual funds can only be traded once a day. And there's also more transparency. The prices are more transparent than, say, mutual fund prices because they're based on the underlying assets. So if there is an ETF approved for Bitcoin, a spot ETF, then what can happen? Well, let's first look at something maybe a little bit similar. That would be gold. So you can see here, this is the weekly chart, and you can see that from the mid-80s over here, the mid-80s all the way to the beginning of the 2000s, gold was in a pretty tight range between about 520 and about 250. Now, ETF for gold came into being in the early 2000s, and you can see in the years right after that, there was a meteoric rise in gold. And a lot of analysts feel that the same thing can happen with Bitcoin if there is an ETF approved. Now why would that be? Well, price action from gold kind of gives us a hint of what could happen with Bitcoin. But the second way that an ETF can affect Bitcoin would be that it basically will legitimize Bitcoin and make it much more widely accepted as a financial asset. So, what happens is the SEC approves a spot ETF. In other words, an ETF that's just traded Bitcoin on the spot market. It would be a major endorsement coming out of the SEC. And that leads to much more increased institutional investment. In fact, there's a report by the Fidelity Digital Asset, which is a very large investment firm, that a spot ETF could attract upwards of $800 billion of institutional capital in the next 5 years. Now, why is that important? Institutional capital, that's capital from hedge funds, from money market managers, from institutional investors like pension funds. This kind of money is what really drives the price of Bitcoin. Now, 800 billion might be a lot, maybe it's a lot less than that. But the fact is that Bitcoin's price is largely influenced by the institutional money that's coming in. So let's take a look here and see what NYDIG has to say about the possibility of a Bitcoin ETF. They say here, the numbers are striking on an absolute basis. There's $210 billion invested in gold funds. And again, if we look at Bitcoin as an asset similar to gold, where it's a store of value, then we can look at Bitcoin and see how it relates to gold if there's an ETF. So $210 billion are invested in gold funds, while only $28 billion are invested in Bitcoin funds. And it goes on to say that even though Bitcoin is much more volatile than gold by a factor of about 3.5 times, it would still result in a nearly $30 billion incremental demand for a Bitcoin ETF. $30 billion, that's double the demand of what there is right now. So it's a big deal that an ETF is approved. And it's not just for in institutional money. It's also a big deal for just the average Americans, because what will happen is that if an ETF is approved by with companies like BlackRock or Fidelity, these are big influencers in the space. And so the average financial planner, the average money market manager, they are going to look to these companies like BlackRock and Fidelity to give them an idea of what's safe and what's good to invest in the market. If BlackRock wants to have an ETF around Bitcoin, it's going to really broaden the acceptance of Bitcoin in the larger financial institutions. And that means that a lot more Americans, average Americans, will be able to get into Bitcoin. Right now, it's pretty difficult. Well, it isn't so much difficult, but if you want to buy Bitcoin, you can't just go to your E-Trade account and buy Bitcoin. It's not available there. You have to go to a different account. You have to go to a Coinbase or a Binance. And most people don't want to take the time to open up another account for their investments. But if an ETF is approved, that's going to be available on all the major investment platforms. E-Trade, Fidelity, BlackRock, all these will eventually have Bitcoin available not only to institutions, but to the general public. Now, let's take a look at what will happen just with the retail investor. This is from Finbold, okay? And it just gives you graphically the amount of investors in America that own Bitcoin. And right now they're saying that about 20% of Americans own crypto, okay? That's maybe larger than some of you thought, but 20% is not very large amount of people, because if you look here, and this is from the Motley Fool, you can see that right now over 60% of Americans own stock. So that means that only 20% own crypto, 60% own stock. If an ETF comes about, there's going to be a big increase in the percentage of people who own crypto, because the percentage of people that own stock are much greater, 3 times as great. So we could see just about the same amount of growth from the retail as we could from the investment community. So that's the second reason. It's going to legitimize Bitcoin for a lot more people. Now the third reason, and this is what I wanted to point out in the beginning, that has the greatest potential for us as traders. And that is that once there is a Bitcoin ETF, then there is the possibility that you will be able to use options in trading Bitcoin. And options are the way that professionals use to trade an asset. And it's the most effective way to trade. Now, it is difficult. It's not really the most easy thing, because options are complex instruments, and they can be a little bit difficult to understand. They're risky too. You can lose more money than you invest if you don't know what you're doing. And options require a much higher level of liquidity. In other words, there must be a lot more buyers and sellers. Now, what an ETF does is allows a lot more buyers and sellers to come into the Bitcoin market or the crypto market if there's a ETF for something like, say, Ethereum. But the main thing is that right now there is no easy way to use options with Bitcoin. There aren't platforms that have enough liquidity, in other words, enough buyers and sellers to be able to use options effectively. But if BlackRock gets an ETF, or if Fidelity or any one of these large institutions get an ETF, very soon afterwards, they will start to allow options to be traded, just like they allow options to be traded on platforms. And this is going to give a lot of liquidity into the market, so that it's going to be much more easy to use options. So the thing is, we don't know when an ETF is going to happen. Most analysts feel that it's going to happen. We just don't know when. It might be in 2023, it might be in 2024. But what we need to do now is prepare ourselves for when that happens. The price is going to be affected, most likely to the upside, very dramatically. 2, there's going to be much more institutional money coming in and also retail money coming in. And 3, and I think most important to us as a trader, the ability to use options will become much more easily available. So that's it for today. If you enjoyed this, please give a like, subscribe, and I'll see you in the next one.